Hey guys, this is CA Sagar Kasat and I welcome you all to Guideline. Friends, I got one request on CARO 2016 Hindi plus English video that sir, can you please make this video in English? And that is where I thought that I should help you out for those students basically who prefer in 100% English way for the CARO 2016 marathon revision in a very short video. I'm making this for all of you. I just need a small support from your side. Please share this particular video with all of your friends. Like this video if you really feel that this is beneficial for all of you, and please don't forget to subscribe the channel because I'll be definitely coming up with a lot of videos, not just for your intermediate but after your intermediate for the final curriculum, and apart from that also as a general videos I'll be definitely love to make in English for all of you. So please do that. Please support me. Now let's start off with this quick revision on the CARO 2016. Okay guys, so very important thing, this CARO 2016 is very first point, that is the reporting requirement by the central government. By whom? Central government. For whom? Central government requires the statutory auditors of such a specified class of companies. Okay, so this is the reporting requirement by central government for the statutory auditors of the statutory financial auditors, obviously, okay, of certain specified class of companies. Second most important thing, that there are four major paragraphs in this particular CARO 2016 which are relevant for you to understand. Very first paragraph, it is only talking about the title of this particular order, which is there is company's auditors report order. Okay, so title, extent to which it is applicable, and basically extent, and the second thing is applicability of the order. Second paragraph talks about for which class of companies this would be the applicable. So applicability of the order has been given in paragraph number 2. Para 3 is talking about the 16 specific clauses for which auditor need to understand the things as required by the clauses, all these 16 clauses in para number 3, and report on that for the required company. And para 4 talks about that if any of the clause reporting has been adversely reported by the statutory financial auditor, then they have to consider the reasons and report that reasons as well according to para number 4. Okay, so this is the short brief of basically short point of your para 4 or 4 paras of CARO 2016. Very first and the most important thing is para number 2, that is applicability of the order. So to whom this particular CARO 2016 will be applicable? So guys, this will be applicable to all the companies, including the foreign company, This is very important. So please remember, foreign company as per the definition of Companies Act 2013, obviously. Okay, so it is speaking very frankly that sir, this is applicable to every company including the foreign company, but except sir, there are certain exceptions. So 5 exceptions you have to remember. Very first exception is OPC and small company, 1% company and small company. Second exception is the banking company. Why is a banking company? Because RBI also have their specific requirements like LFAR, long form of audit report, which you learn in chapter number 12. Are you guys clear? So banking company. Then after insurance company, again the same requirement, again the specific requirement by IRDA, Insurance Regulatory Development Authority, which is the regulator of insurance companies. Then after that, Section 8 company according to Companies Act 2013, which is nothing but not for profit organization, NPO. Okay, so very important thing, OPC and small company, banking company, insurance company, and the fourth one, Section 8 company. These 4 types of companies, basically 5 types of companies, are completely exempted from the CARO 2016 reporting requirement. But there is one private limited company. Okay, they have not given complete exemption to all the private limited companies, but they have told that if private limited company is up to the certain level, then those will be the exempted. But once they breach that level, then CARO 16 will be applicable. Now what is that level? That criteria has to be considered. So there are 3 things which determines or which considered in the respective criteria according to their financial strength. Okay, very first it is the revenue of the company. Second, it is the net worth of the company, means paid up share capital plus the reserves. And the third thing, it is about the total borrowings. Okay, Apart from this, there is one specific criteria also have been given. So let's quickly revise that particular point. Very first, private limited company. Which are the private limited company are exempted? Very first thing, if any of the private limited company is not a subsidiary of public company. Why so? Because if you know that according to Companies Act 2013, if any private limited company is a subsidiary of public company, then that is deemed to be the public company. And obviously there is no exemption for the public companies, and that is the reason that private limited company should not be the subsidiary of what your public company. Second thing, that private limited company should not be the holding company of any public company. Means very simple, that private limited company should not hold any amount of interest, substantial interest or the controlling interest. Okay, substantial interest means 20%, more than 20%, up to 50%, and controlling interest means more than 50%. So it should not have any substantial or controlling interest in any of the public company. Okay, because if there is substantial interest, that public company will become the associate, but the private company would be the holding company. Again, if they have the controlling interest, that public company will become the subsidiary, but private limited company will be the holding company. In both the scenarios, private limited shall be holding company, and if any private limited company is a holding company of any public company, then guys, that will not be exempted. So private limited company should not be the subsidiary or holding of the public limited company. That is very first criteria. But this criteria is not according to the financial strength. Obviously, this is based on their investment. Okay. Now the second most important thing, what are the financial strengths of that company that has to be considered? Very first thing, the revenue should not be more than 10 crores. Means revenue should be lower than equal to 10 crores. In all these three criteria, there is lower than equal to. So this is very easy to remember. The next most important thing, all these criteria has to be checked during the financial year for which you are testing the CARO applicability during the financial year. Okay. Now revenue, obviously for the financial year for which you are particularly performing the audit. Then paid up share capital plus reserves, this is the as on date balance. So then as on the balance sheet date for which that respective financial year end. Okay, for which you are performing audit. And then total borrowings, many times total borrowings is considered to be almost every time as on any of the time, at any point of time during the financial year. Okay, at any point of time during the financial year. So borrowing, if borrowing is even for more than 1 crore, more than equal to 1 crore for even a single day during the financial year, but there is no breaching as at the end, still you have to consider this because they require at any point of time. So what is the criteria? 10 crores, 1 crore and 1 crore. Okay, 10 crore, 1 crore, 1 crore. 10 crore highest limit of revenue. Revenue should be less than equal to 10 crores. If this criteria satisfied, obviously, then go to second criteria, that is paid up share capital plus reserves. If that is less than equal to 1 crore, very good. Let's check out third criteria, total borrowings. If that is less than equal to 1 crore, absolutely fine. If all these three criteria are satisfied, then CARO is not applicable to that respective private company. But if any of the criteria, any one criteria is also out of all these three criteria, if any of the criteria is not satisfied, then CARO shall be applicable to that private limited company. Obviously, there are certain considerations with respect to the which reserves need to be considered, okay, and which revenues need to be considered. So all these clarifications are there basically which need to be considered, and there is one of the MCQ also have been asked by the institute in one of the RTP. This reference I would give obviously in the comment section of the video, so please check out the comment section of the video after this video gets published. Okay, I'll mention that reference respective in the comment section of that respective question, so please don't miss that question before examination. That is very important question. In that one MCQ itself you will clear out your all these things. Okay, are you guys clear with this? Very important. Now next paragraph, para 3 of the CARO 2016 talks about 16 reporting clauses. There are 16 reporting clauses. Okay, in CARO 2020 we shall be applicable from next year, that is May 22 examination for all CA CMA. For CMA it has already been applicable for June 21 and December 21 examination, but for CA it will be applicable from May 22 examination. Okay, so there are 16 reporting clauses in 2016 order. in CARO 2020 there are 21 reporting clauses, so there are additional some clauses and there is one merge of two clauses as well according to 16. So we don't care about that 2020 right now, just focus on CARO 2016. So there are 16 reporting clauses. Very first reporting clause, very important for the examination, that is about the fixed assets. So what this clause required, there are three things that has to be checked. Very first, whether the company has maintained the proper records. So proper records should include the quantitative details as well as the situation details of that respective fixed assets. So company should maintain ideally one of the register of all the fixed assets of the company as at respective date of balance sheet. That is very important. So proper records, whether the company has maintained or not, that has to be checked by the auditor and has to be reported in this clause 1. Second thing, reporting of second thing in the clause 1. So there are three things that has to be considered by the auditor for the reporting in clause 1. Very first, proper records. Second, whether the company has conducted physical verification at the reasonable intervals. So what are the reasonable interval? According to practical life, once in 3 years, once in 3 years, once in 3 years, that is considered to be the reasonable interval for fixed assets. And for inventories, the reasonable interval is considered to be the ideally once in a year, once in a year. Okay, this is what a reasonable interval according to practicality. But sir, what we need to consider is very first, whether the company has maintained the proper records of the fixed assets. Come back to clause 1. Then sir, whether the company has conducted physical verification at reasonable intervals. If they have conducted, then whether they came up with any of the discrepancy in that, and if yes sir, then whether that discrepancies have been properly dealt up with the in the financial statements, okay, books of accounts. Third thing that has to be checked by the auditor, whether the company has maintained, whether the company has title deeds in its own name. So whether the title deeds of the immovable properties, and it is very important for the auditor to check 100% all the immovable assets ka title deeds. Do you guys remember in chapter number 9, audit of items of financial statement, you learn this particular point of audit of immovable assets. So auditor has to check 100% all the immovable assets ka title deeds. Okay, whether the title deed is in the name of the company or not. This indicates which assertion, rights and obligation. So rights is the one of the important assertion which is tested over here for the title deeds. Okay, so you have to check whether the company has all the title deeds of the immovable properties in its own name. So these are the three things that has to be considered by the statutory financial auditor and has to be reported over in this CARO clause 1 of para number 3. Clause 1 of para 3 of CARO 2016. So whenever you get the question in examination, guys, please for every answer please mention clause number if you remember. Okay, but if you don't remember clause number, because there are 16 clauses now, probably you might not remember the clause number. Don't worry, if you remember clause number, then you will be writing down clause number, but of para 3. This para 3 is common for all the 16 clauses. So you should remember this of para 3 of CARO 2016. This should be the start. This should be the start of your answer. CARO, obviously you cannot write the shortcuts. Okay, you have to write down the full form of CARO. Please remember this. So clause, if you remember the clause number, then absolutely your start should be like this as per clause this of para 3 of 2016, CARO 2016. Second thing, if you don't remember the clause number, then guys you can write down like this as per relevant clause of the para 3 of CARO 2016. Clear with this? This is from the examination perspective how you should write the answer. I hope you guys are absolutely clear with this. Next point, guys. Second clause. This first one, please mark this from the examination important perspective. Okay. Next one is your. So I am just marking this as R. In circle R. Okay. In circle R means what? Your revision perspective. Before exam revision, BER or in circle R. Second clause. Again, this is also important for examination, inventories. First clause talks about fixed assets, second one inventories. What are the two things that need to be checked by the auditor for this particular respective requirement of reporting in inventories? That is this one. Exactly copy pasted over here. Physical verification of the inventory has been carried out by the company on the reasonable interval, and I talk that once in every year. Here once in 3 years, here once in every year. Basically, this is not two, once in a year, once in a year. Then sir, whether the physical verification of the inventories have been conducted by the company at reasonable intervals. Second thing, if any material discrepancies have been noted, then whether that have been properly disclosed or dealt in the books of accounts. The next one, clause number 3 is about the secured or unsecured loans to section 189 parties. So if you know that section 189 parties, there are specific parties has been given in Companies Act section 189, which are the related parties. Okay, so if companies have given to those specified parties any secured or unsecured loan, then what is the reporting requirement? Auditor has to check whether the terms and conditions of that loan are not prejudicial to the company's interest, means there is no any adverse impact to the company's interest due to the terms and conditions of that respective secured or unsecured loan allowed to the 189 parties. Then second, the auditor has to check the schedule of the repayments and need to check whether that repayments of the loans are regular, so whether that is affecting adversely to the cash flows of the company. And the third thing, if any of the loan is overdue for more than 90 days, then sir, what are the steps that have been taken by the company for the recovery of those loans? That is need to be checked by the auditor and reported in this clause number 3. So there are 3 things. Very first thing, terms and conditions not prejudicial to the interest of the company. Second, schedule of repayment has to be checked whether that is regular. And third thing, if that is not regular, if there is any overdue loan for more than 90 days, whether the company has taken any steps and what are those steps that has been taken by the company for the recovery of such overdue payments. Fourth clause. Now sir, investments, guarantees and loans and securities, again section 185 and 186 regarding to this particular thing has to be checked by the auditor. So investments, guarantees, loans and securities, all these 4 things has to be checked. So auditor has to check very simply whether the company has complied with section 185 and 186 of the Companies Act 2013. Then second thing, if the company has not complied with that, then what are the details of non-compliance? That details of non-compliance has to be given by the auditor in this reporting requirement. Are you guys clear? So this is again very easy, that section 185 and 186, 185 talk about the loans to directors and same the way 186 talk about the investment guarantees to those. So now clause number 5. Clause number 1 was about the fixed assets, 2 inventories, third secured or unsecured loans to whom 189 parties, then fourth 185 and 186. Then sir, fifth clause is about the companies accepting public deposits. Sir, these are the banks, public deposits, companies which accept the public deposits, these are the banks, right? But for banking company the CARO is not at all applicable. Then why that is clause has been given? Sir, it is not required beta that this public deposits are accepted only by the banking companies. Public deposits are also accepted by various corporates, private limited companies, public limited companies, and that is where this particular public, ideally public limited companies, not the private one. Private one accepts that from the some small number of people. Okay, obviously. So these are the public deposits. So where the companies accept the public deposits, then section 73 to 76 has to be complied by that company. So auditor has to check if the company has accepted any public deposits, then whether the company has complied with this particular requirement of the RBI, Companies Act, other rules have been complied or not. If the company has not complied with any of such rules, that is section 73 to 76, and the RBI requirements other respective rules to that organization, then what is the nature of contravention, and sir, whether the company has received any order regarding such contravention or the breaching of law from the Company Law Board, CLB, RBI or the court or NCLT, National Company Law Tribunal, and whether the company has complied with such orders or not, that has also need to be checked by the auditor. So this was about the clause number 5. Again, please remember along with me, clause 1 fixed asset, clause 2 inventory. These both clauses are very important. Clause 3 secured unsecured loan to 189 parties. Clause 4 185 and 186 means loans, investment, guarantees and securities, and then clause 5 is about the public deposits 73 to 76. Next important clause, clause number 6, and very easy clause basically. Clause number 6, clause number 7, very important. Clause number 7 is the most important one. Okay, clause number 6, very easy. So whether the company is applicable with the section 148 requirements, that is cost records requirement. So if the company is applicable with the cost records, not the cost audit, please understand. If the company is applicable with the cost records requirement, sir, what is the requirement of cost records? Turnover, overall turnover during the preceding financial year should be more than equal to 35 crores. If that is more than equal to 35 crores, then cost records are applicable. So if the company is applicable with the cost records, whether the company has maintained or not, this is the simple requirement that has to be checked by the auditor and reported in clause 6 of the CARO 2016. Then CARO 2016 clause 7 talk about very important thing, that is statutory dues. And this reporting on the statutory dues is applicable to only those statutory dues which are overdue for more than 6 months. That is very important. So there are two parts has to be considered. Very first part is whether the statutory dues are in dispute, or second thing are undisputed. Very first thing that we will cover is about the undisputed statutory dues. So if the company is regular in making the payments of undisputed statutory dues, that has to be checked by the auditor. So whether the company is regular in payment of undisputed statutory dues, yes or not. Second thing, if not, then any of such statutory dues which are arrears, means which are outstanding for more than 6 months. That is very important, guys. Come on. So there is one example. Let's take one example basically. So let's say this is the 31st March, okay, for which the balance sheet date for which you are reporting, okay. So now let's say this is the September of what, 30th September approximately I am considering. You obviously need to calculate that particular 6 months means what, sir, 30th September ideally, okay. So after that, these are the outstanding for 6 months. When any statutory due will be outstanding for 6 months, when it is due before 30th September. So this is my 1st April from which the financial year started. For this particular financial year, this is my audited financial year, audit period. Okay, so audit financial year is this one, 1st April to 31st March. Now, as on balance sheet date, if any statutory dues is more than outstanding for more than 6 months, then sir, that has to be checked over here. So now outstanding for more than 6 months, it must be due before 30th September over here. Before 30th September. Obviously, before 30th September means it can be before 1st April as well. Obviously, you are considering. So it is not like that it should be due in that respective financial year only. Before 30th September. So it can be from last year as well. So if it is due here in any of the respective period, okay, here it is due and it is still outstanding as at balance sheet date, you have to consider these statutory dues, outstanding statutory dues. But sir, if any stat due is due over here and for let's say in December and company has not paid till 31st March, you don't need to report this. You don't need to report any of the statutory due which is due in this particular 6 months and outstanding as an balance sheet date. You don't need to cover that. You have to cover only those statutory dues which are outstanding for more than 6 months and which are this one, okay, up to 30th September. Perfect. So this is very important thing that has to be considered by the auditor. Obviously, these are the undisputed statutory dues only. So very first thing, stat dues are regular or not with respect to what, undisputed stat dues. Then second, if not, then what are the arrears outstanding for more than 6 months as at the balance sheet date that need to be reported. And if the stat dues are disputed, then the first part, if the stat dues are disputed, then second thing, sir, under which forum that dispute is coming, dispute is going on, and sir, what is the amount of that dispute is. Okay, so amount and forum of that dispute has to be disclosed by the auditor in clause 7 reporting of the CARO 2016 para 3. The next clause number 8 talk about the defaulted repayment. Now here it was about loans given to the 189 parties, loans given under section 185. Sir, here it is loan taken by the company. Okay, so if any company has taken the loans and they have defaulted in repayment of that loan, if yes, auditor has to firstly check whether the company has defaulted in any repayment of the loan. If yes, then sir, what is the that default amount and default duration? That has to be reported in clause 8 of the CARO 2016 para 3. To whom that loans have been, from whom the loans have been taken by the company. So that loan can be any of the bank, financial institution, government, debenture holders as well. Now very important, apart from debenture holders, except debenture holders. For all these things, if the company has taken loan from bank, FI or government, then for these parties basically, if there is any default in repayment, then amount and duration obviously has to be given, plus there is additional requirement of lender wise details has to be reported in this scenario for these particular parties. Obviously for debenture holders only amount and duration is the requirement, but for these other parties, along with amount and duration, you have to report the lender wise details of the default. Clear? So again, this is important clause, okay, but not that much important as compared to clause 7, 1 and 2. Okay, clear with this. Next one, clause number 9, end use of money. You have the question on this particular clause in RTP. What is the end use of money? Now we will cover this clause number 9 and clause number 14 together, okay, because students are getting confused in this particular two clauses. Very first, end use of money in clause number 9, it is talked only about the IPO or FPO, initial public offer by the company or the further public offer. In clause 14, we talk about the preferential allotment or the private placement of the shares and debentures. So it is completely different, and the IPO FPO is completely different. For IPO FPO there is clause 9. For a private placement or the preferential allotment there is clause 14. Very important, on both of these clauses there has been the question in RTP or MTPs. Okay, so what you have to check? Very first, in clause number 9, you have to check the end use of money. End use of money means what? For which amount, for which actually the amount has been raised in the IPO or FPO, for which purpose, for which objectives, whether the company has utilized that IPO money or proceeds for the same objective or not, that has to be checked by the auditor, including the debt instruments, IPO, FPO. Okay, and if the company has not used for that respective objective or purpose which was disclosed to the shareholders in red herring prospectus, then sir, details of that delays, defaults and subsequent ratifications, if any, has been taken by the company, that has to be checked by the auditor and reported in this clause number 9. So let's come to clause number 14 immediately. It talks about the preferential allotment and private placement. Sir, what is the difference between private placement and preferential allotment? I have given this difference on my website ka blog. Okay, you can check out my website guideline.in, and there is one specific section in that blog section, knowledge center, and you can go to that knowledge center and there is a blog has been written down on this difference of private placement and preferential allotment. You can obviously check it out whenever you get a free time, okay, just to understand more in this. Next, so compliance, there are three things that has to be checked over here: preferential allotment and private placement. Obviously the perspective is same in clause number 9 and clause number 14. Here it was again the end use of money. The same thing has to be checked over here, the end use of money. Along with that, whether the company comply with the section 42. Section 42 talks about the private placement ka process of private placement. So that section 42 has been complied or not by the company, that has to be checked. Then second thing, if the company has used the proceeds received, amount received from the private placement preferential allotment for the same purpose which was disclosed to the private placement holders. Okay, and if not used for that respective purpose, then what is the amount of that default and nature of non-compliance, that has to be reported by the auditor in clause number 14. Please mark this as well, also very important. Next one, sir, clause number 10, very important for the examination. Okay, which are the clauses that are most important for examination, guys? I'm just writing it down, most important clauses for examination. You can just mark it down. I call it as like BER, before exam revision. Okay, the last day revision or the before exam revision in that 1.5 day. So clause number 1, clause number 2, clause number 7, clause number 9, clause number 10, clause number 14. These are the most important clauses. Only 6 clauses are very important for your examination. From the examination perspective, these are the 6 clauses which are the most important. Apart from this, clause 6 is very easy, cost records. Okay, so I don't think I should include that over here. Okay, so guys, come on, now let's see what is the clause 10 requirement, that is about the fraud. What this clause 10 talks about? It talks about the fraud reporting requirement. So you have the, as a statutory auditor, you have the reporting requirement on the fraud in section 143 subsection 12 as well. Okay, and that section 143 subsection 12 is specifically restricted to the employee and officer fraud. Are you guys clear with this? Employee or officers fraud. Now this clause 10 is also restricted to employees and officers. Are you guys clear? employees and officers only, on or by the company, on or by the company with the employee or officer. But there is major difference in these two sections, 143.12 and CARO clause 10. There is one major difference, that in CARO clause 10 you have to report only such clauses which have been occurred on the company or by the company with the employee or by the employee or officer. Okay, so which have been noticed or reported. So any suspected fraud, if there is any suspected fraud, that will not be reported in clause 10, that will be reported only in section 143 subsection 12, and for 240 SA 240 requirements shall be complied with. But only suspected, so only noticed and reported frauds will be coming under reporting of clause 10 of fraud. Sir, whether the notice of fraud also reported in 143.12? Yes, obviously. In 143.12, notice reported or suspected. It can be suspected as well according to 143.12. But in clause 10 of CARO 2016, only noticed and reported fraud has to be considered. This is very important question. There has been the descriptive question in RTP as well. You can just check out my question bank as well. Okay, so you will get a question bank in nominal price. Okay, all the keywords are highlighted in that respective question bank. Okay, so you can check it out, and all the questions have been covered from the RTPs, MTPs, everything, including study mat test your knowledge questions as well. You can just take a overview of that on my application, and complete PDF downloadable files are there. Along with that, I am also providing the 50 most important questions ka free videos, explanatory videos to the question bank buyers, basically to the students who will be enrolling for the question bank or will be buying that question bank. Okay, so you'll be getting that. Right now the price is only 400 rupees. Okay, so you can obviously take a benefit of that, and obviously there is 25% discount as well for the limited period of time up to 15th of September basically. Okay, so you can take a benefit of that if you want. So what is the clause 10? So on or by the company with the employee or the officer. Second thing, has been noticed or reported during the year. And then sir, if there has been any such fraud, then sir, what as the nature of that fraud and amount of that respective fraud. Next things up, clause number 11, managerial remuneration. Clause 10 was very important. Clause 11, managerial remuneration, you know that section 197 of the Companies Act disclose requires about this specific requirement up to 11% of maximum net profits. Okay, do you remember that? Okay, so 197 is applicable for that. If the company is applicable with the 197, obviously the company has to check whether the paid or provided as per 197. Sir, if not, then what is the amount involved and the steps taken for the refund? If according to 197, there is a maximum cap limit which there can be the managerial remuneration, including all the directors. It is 11% of net profits. There is obviously the individual limits as well, 1%, 5%. I am considering only 11% of net profits ka limit. If the company has paid exceeding 11%, then what is the exceeding amount of that, and what are the steps that has been taken by the company for the refund of excessive managerial remuneration paid by the company to the directors, to the key managerial personnel. Next thing, clause number 12. Clause number 12 talk about the needy companies. Basically, these are such companies which are actually working only for certain restricted number of peoples, which are the members of that respective company. So they will be having the lending and borrowing of money within the members itself. They'll work for themselves only. So there are specific member based companies, needy companies. So these companies has to comply with these two requirements, and if the auditor is there of that respective needy company, then auditor has to check whether they have complied with this net owned funds to deposits ratio of 1:20. Okay, so whatever is the deposits, the net owned funds should be the 1/20th of that respective. This is the minimum requirement that has to be complied by the needy company, that has to be checked by the auditor and reported under clause 12. The next thing, whether they are maintaining 10% unencumbered term deposits. Unencumbered means such a term deposits which do not bear with any of the charges. Okay, to meet out the liability. That is also the second reporting requirement by the statutory financial auditor of the needy company. Then clause number 13 is there with respect to the related party transaction. So you must be remembering section 188 of the Companies Act 2013. This requires about the related party transactions. Okay, according to Companies Act 2013. Sir, then why 177 has been given over here? 177 talks about the audit committee. Okay, and 177 audit committee also require that all the related party transaction has to be approved by the audit committee. If the 177 is applicable to the company, all the related party transaction has to be approved by the audit committee, and that is where this particular requirement comes into picture. So whether the company have complied with 177 if applicable to them and 188 of the Companies Act 2013, that has to be checked by the auditor and reported in clause 13. If company has not complied, answer then what is the non-compliance. And the second thing, if the company has disclosed all the required details in the financial statements according to respective accounting standard or Ind AS. Clear? This is clause number 13. Now next, clause number 14 we have already covered. Clause number 15 is about the non-cash transactions with the directors. So if the company has any of the transactions in kind, means the company has given the car to director, then such non-cash transactions with the directors, whether the company has complied with section 192 of the Companies Act 2013, that has to be checked by the auditor, and if not, then non-compliance detail has to be given. And the last clause is about the NBFC, which are such companies basically which requires the registration under section 45 IA of the RBI Act 1934. It is 1934. Please write it down, 1934. Okay, so if the company is required to be registered under section 45 IA of the RBI Act, then sir, whether that registration has been taken by the company or not, and that registration is for the NBFC, non-banking financial companies. I hope you guys are absolutely clear. Clause 1, there are 6 clauses which are very important for the examination. Clause 1 talk about the fixed assets, clause 2 inventory, clause 7 statutory dues, clause 9 IPO FPO, clause 10 fraud, clause 14 private placement and preferential allotment. These are the 6 clauses, the most important for examination. Apart from that, also examination can be asked, question can be asked in examination. Obviously all clauses are under para 3 of the CARO 2016. And what is about the para 4? In para 4, reasons has to be stated for the unfavorable or the qualified response to any of the clause above. Where auditor is unable to express an opinion on any of the matter, so because of any limitation, if auditor is not able to provide any of the reporting in any of the 16 clauses, then auditor has to report this fact along with the reason of this particular inability to provide the reporting. Are you guys clear with this? This is very important. Para 4 is also important for the examination purpose. So please remember this particular CARO 2016, all these reporting requirements and important things very properly. I also told you what should be the writing tactic of the answer in CARO 2016. Please remember that. Please study well and let me know if you have any queries. If you want this chart, that is also available on our application. You can obviously reach out to me for any of the queries. This is the chart of the company's company audit chapter with the CARO 2016. There is only one chart, and you can obviously take a benefit of all these things. So guys, take care of yourself. We'll meet in the next video. Please do not forget to subscribe the channel, like this video and share with all of your friends, because that is very important in this initial phase of my career as well. Okay, so your support is only the energy for my boosting efforts for all of you. So guys, please support, please like, and let's meet in the next video. Take care. Bye bye.